All right, hey there. Good afternoon, or geez, not quite yet. I guess it's good morning, everybody. Christopher Franks with Texas West Capital. It's just a few minutes after 11 a.m. Central Standard Time here on Tuesday, the 21st of September, 2021. I hope y'all are doing well. Man, so much fear mongering and whatnot going out there, but and to be fair, there's a lot going on with the stock market that has people concerned, especially if you're in risky assets. It is what it is. We'll see how things turn out here, but we'll take a look. Who's here already? Let me see here. Bill, what's going on, buddy? Hank's checking in from the beach. Hank, talk slowly. I don't know that I can. I think you guys actually have to slow these things down. I get excitable. Hope you're enjoying that holiday you have going on there. Trader XO, what's up, buddy? Good to see you checking in, man. Excuse me, guys. I got these allergies kicking in over here last couple of days. Boris, what's up, man? ESCLT is here. Is that Dimas? Good to see you checking in. Let me see here. Hey, I appreciate you, Boris. Let me see. Hank says, I have a rule 3, enjoy your capital. Yeah, it's no use making it if you can't enjoy it, right? Let me see here. What's going on? Flamin' Gala, what's up? Good to see you checking in. Bianca's here. Mike Kane, what's up, man? Yeah, it is afternoon Eastern Standard Time there, isn't it? I get you right on that cusp. It's almost evening over there, and Bill says, in the UK. Telluride, buenos dias. What's going on, man? Let me see. Spark Architects here. Adam's here. Bitcoin Anarchist, what's up, man? Andrew checking in. Cue the action. Good to see you guys here. Man, I am doing well, man. I inspired you to grow a beard, Trader XO. You're gonna have to show us all, man. You're gonna have to show us all. I need to trim this back up here again. But yeah, that beard thing, it kind of sticks around, whether it's in trend or not. So yeah, it's just the way we do it, right? Phil says as he misses the stream, he watches it on 2 times the speed. I don't know that you can understand me. Most people, watching in, especially, coming from other parts of the world, have a little difficulty understanding me sometimes when I speak really fast. So it is what it is. Farm D, what's up, man? Long time no see. Let's see, Mauricio, good to have you here as well. Anyway, hey, listen, guys. So we'd love to have you join us. HowToTradeToWin.com. Tier 3 is where it's at. 3 live streams a week, guys. We talk about Wyckoff on Mondays. We talk about Elliott Wave on Thursdays. And we apply them to current charts so you can see how you can get from that theory to practice. And then on Wednesdays is our tips, tricks, and techniques where we either show you a rules-based system to help you figure out how to enter and trade, effectively. Or we talk about different indicators and what they are and how to use them properly to trade with. So, a lot of information you're just not going to get anywhere else, guys. You get it 3 times a week with us. Plus, of course, chart requests, chart critiques, all that fun stuff. So much stuff in Tier 3. Some people say, oh, but you know what? That's so much money, and I'd rather spend it on, partying with my friends or something. Guys, the reality of it is, it's a lot for what you're paying. You're not paying much for what you're getting. So, do what you need to do. But if you'd like to join us, we'd love to have you, of course. Just helping you become better traders, especially, in all markets, guys, not just bull markets. In bull markets, everybody's an expert. Everybody's knows what they're doing, right? It's not really the way it is. But anyway, a bull market can make you look profitable. It's when those bear markets kick in that it kind of really weeds out everybody there. So anyway, yeah, we'd love to have you here. Hey, listen, guys, updates. I told you we got lots of stuff going on Q4 here. We've already started doing some stuff. Don't forget, you can join us there. Follow me at twitter.com, over there at TX West Capital. I don't know what I'm saying. My Twitter handle is TX West Capital. Follow me there on Twitter, guys. There posted at the top of my page, you'll see 2 things. You'll see a link to the newsletter. Second issue went out this week. We talked a little bit about China and Evergrande and stuff like that. Last week, it was kind of centered on the reverse repo and dollar liquidity, stuff like that. So, we also throw in a few potential trade ideas, as well as we look at some charts and different things like gold and oil and all that other fun stuff, guys. So I think it's a great bit of information. It's for free. But you sign up for that, and then also, do what you need to do to get your chance to win, an Xbox Series X, a PS5, part of $5,000 in Bitcoin that we're going to give away. I've got some books and stuff I'm going to be adding in as well, guys. I've got some books on socioeconomic theory and Elliott Wave and stuff like that I think you guys might really be excited about as well, if you're serious about trading, that is. So I'm going to be adding those in here in the next week or two. You guys will hear about that. But also, we've got some things coming up, guys. We've got a new site coming up. We're going to start transitioning everybody over to TexasWestCapital.com. Yeah, that's going to be awesome. So we're going to open up with the, for everybody that comes in new, and then we're going to get all our members kind of transferred over there as well. This new back end, man, it's so sleek. Lots of stuff. We'll be able to educate you all even better than what we do already. But another important thing is, something you guys have been asking for and something I've been trying to get going here for a while, is we're going to actually have an affiliate program, guys. So, I know a lot of y'all are out there pushing us because you love what we do. Well, I want to reward y'all for that. So that's coming up as well. So just two more things coming up. I've still got that other thing that I just can't tell you about yet. Like I said, guys, Alpha Trader, right? Just keep that in mind. But when the time comes up here pretty soon, I'll let you guys know, and that should be exciting times. All right? So lots and lots of stuff going on, guys. Let me see. Let's get a right chart here. We'll look at Bitcoin here. Who else is showing up here? Brian Riley, what's up? TV Canal is here. Peter is here. Good to see you guys. Let's see here. Boris says, best investment I've made in years is the Tier 3 for Texas West Capital. Man, I love those kind of glowing endorsements. That's great stuff. That means I'm doing, that means it makes it worth what I'm doing here, guys. Those of you that don't know, I spend a lot of hours every week working with TWC to get everything going here and to continually make it better and better and better. Often I'm up well past midnight, 3 a.m. in the morning, only to get up at 7 a.m. and start again. So, and I do it because I love it. I love that I can help you guys. And so, when you guys are excited like that and you feel like it's a good thing, man, I really, that's great, man. It makes me feel fantastic. I can't even tell you guys. I love it. Who else is here? Is that CH? Good to see you. Common Man checking in says, yesterday was fun. Oh, let me see here. He says, Don Pena is shorting Bitcoin. I'm not sure who that is. Oh, man. Asim Risk is here. What's going on, man? High or low crypto. He wants to know what's the other that I won't tell about. I'm giving out a Lambo? No. No. I can't tell you. It's not up and going yet, guys. I'll tell you as we get near it there. Or I'll give you some hints. Today's not the day, though. GT, what's up, man? Telluride says Coinbase Lend program was shot down by the SEC, but Gemini can do it. Interesting. Yeah, you guys, when it comes to government, the one thing you need to understand is, especially the way the U.S. government's set up, it is set up for lobbying, right? And so laws are usually not passed unless somebody lobbies for them. So a big example, if you guys don't know, is sugar, right? So back about, in the 80s maybe? Corn syrup lobbyists came in there, and they got Congress to limit the amount of sugar and whatnot that could be imported, all that kind of stuff. Effectively having all this, that market that would normally use sugar, rely more and more on corn syrup, which, if you guys don't know, is absolutely terrible for you. But you'll notice it's in almost everything. And so, it was a result of lobbying. And, regulations are needed because regulations clarify the market, which means that those with the bigger money and have certain fiduciary duties, these are legal duties, are able to then invest in these things. So, regulation is good to that point, but it also is a barrier to entry, like licensing. It's a barrier to entry. And so, they're always a product of somebody coming in and lobbying for them, though. And so that's where we're kind of sitting with all that. So Coinbase, said, hey, we're going to do this lending program. And every story's got two sides to it, guys. You know, I mean, I want to believe Coinbase, but at the same time, you know, how much of that story is 100% true? What are they leaving out? What are they not telling us, you know? But, you know, they said, hey, we're going to come out with this lend program, blah, blah, blah. They gave SEC a heads up, supposedly. SEC says, hey, listen, if you go through it, we're going to sue you. And, you know, Coinbase said, well, doggone it. I guess we won't do it then. And, I mean, you can't blame them, you know, if they're going to get sued by the SEC. It's not a fun process, guys. It opens, and here's the problem you may not understand. If you're going to court over something, they might require you to divulge certain information that now becomes a part of court record, which means that puts you at risk for potentially a different kind of lawsuit at a later date. So, you know, it's not so easy as, oh, yeah, I'm just going to go take them to court and that's all good and well, you know. Especially in an environment where things aren't clarified. I mean, again, guys, we got the SEC, we got the IRS, we got the CBOE. They're all fighting over who has, you know, who has control. Whose children are we, you know, as traders in the crypto market? And so, you know, they're continuing to fight over all that. So there's a lot going on in there, guys. I know a lot of times you're sitting on the sidelines and, you know, if you haven't been a part of large, you know, very large public organizations, if you haven't been to law school, all these things can seem real easy, you know, right off, but in reality, they're not. There's not a simple answer. And so there's a lot of problems that could arise. So, you know, Coinbase doing what it, you know, probably is the prudent thing to do, not going with it. So we'll see what happens. They're not going to be just done and over with it. They're going to try and figure something out, I'm sure. So we'll see how that all works out there, right? Boris, man, I appreciate you, man. I seriously do. Thank you so much for saying. So again, guys, I always tell you, you know, I'm not altruistic. I don't do this just because, you know, just to help you guys out. You know, again, for me, it makes me feel good. If I teach you something that works for you, and you're able to, you know, create this different life for yourself because of it, this better life for yourself, man, shoot, I can't tell you how excited that makes me. So, you know, again, and that's a good thing. It doesn't have to be altruistic, guys. A lot of people are stuck in this, oh, you have to do things just because you have to be altruistic, otherwise it's not worth it. It's so much BS. I'm glad the guy with the air that, you know, created air conditioning and indoor plumbing, I'm glad those guys were around. I'm glad they did it for whatever reasons they did it. Because we get it today, right? Especially here in Texas, man. It gets hot. Hey there, Devin. Good to see you, man. Data's checking in here as well. Let me see. Bitcoin Anarchist wants to know, is this a giant correction still from the original 20,000 high in 2017? Possible end of Elliott cycle? 20 to 4. Then correction retrace, bounce back to 65 and now down to sub 10. You know, I've looked at that previously as a possibility. And what you would be looking at then on this would be something like, you would have to look at this as an A, a B, and a C. And I don't know, man. That's, you know, this is 300% above that top there. Usually if you're looking, you know, that would be a flat correction, right? So A, B, and then C down for a flat correction, expanded flat or a running flat, right? 300% is really big. Usually we're only looking like 100 and, I don't know. I usually don't like to go beyond really that 1.618. I mean, sometimes it does. And even then I'm real kind of iffy about putting it out there. But, you know, when you're getting 300%, that's really, really big. That would be a big stretch for a B. So I'm leaning toward it not. You know, again, the way we look at it, I'm leaning toward it not being that. You know, we'll continue to look at it. I mean, even if we were to come down from this area and lower here, there's so many other possibilities prior to that. And the good thing about Elliott Wave, guys, is here's the thing. There's nothing out there that you do that you know it's definitively the top until after it happens. And so the good thing about Elliott Wave is you shouldn't be using it to say, oh, well, God, yeah, I'm definitely going there. There's the target. That's what it's all about. the best way to use Elliott Wave is to understand the trend and where the trend may be reversing. Because like I said, there's multiple ways this could play out right here with, going up or going down, and even going down. There's multiple different counts you can get here to do it. But all you really need to know is it's going down, right? Or that it's going up, right? And then you zoom in on the more local things to kind of figure out where you want your entries and exits. But the big idea is which way is the trend. And I think that's probably the best way to use Elliott Wave, guys. Instead of just trying to say, oh, well, it's definitely going to this target or something. I'm in the business of changing people's lives. Man, I wish more people understood that. That's exactly what it is. But, I can't do it, myself. People have to, be willing to put in the work themselves, right? So here's an example, guys. This morning, one of our friends over, one of our members in TWC, posted this idea. It was something I had talked about previously. Was this idea that here's another, maybe a possible count here, right? So you've got ABC down for A, ABC up for B, C, D, and then E. So this area right here becomes this D and this really small E. I'm not saying it can't be. It's a pretty small area. But, you could have this triangle going here, and then this just becomes the fifth wave here, right? And potentially, this count's pretty close to legit, if not legit right here. Basically gets you 5 waves up, ending diagonal if you guys are into that here at the top, right? And so this is what I'm talking about. You've got these other possible counts that, you may or may not like. A lot of times, I'll discuss counts like this, and new traders come in and they're very emotional because, they kind of get in, they put way too much in, and they need it to go up because they've already spent that money in their heads. And they're usually getting in, toward the top. So, this is always a possibility here. You can't, unless you're breaking out above this swing high while we're below it, this still remains a possibility here. So what we do is we kind of work locally and kind of expand that out as we're playing and, see, do we get this larger count? Do we confirm maybe this larger count, whatever it happens to be? If we're breaking out above this swing high at 65,000, that kind of invalidates this, or probably does. Yeah, probably would. But as long as we're below it, it's still something you have to keep your eyes on as far as it goes. So, it's not, trading isn't as simple as, oh yeah, we're definitely doing this or definitely doing that. And unfortunately, that's what a lot of new traders often look for. And I wish, guys, I could just, put it right through your head that, that isn't the way it is. But most of the time when I tell traders this, new traders or amateur traders this, they often just tune me out and just kind of like move on, call me names, whatever, and move on. And that's why they end up losing money overall. Oh man, it even gets worse if they get lucky and they make, in something like Bitcoin where it moves so fast, crypto market, and they make a good bit of money, and then they keep putting in there because they think they know what they're doing, and then all of a sudden, boom, goes the other way, and that's it, and that's just awful, man. I don't wish that on any of y'all. But I can't force you to pay attention to what I'm saying or to understand where I'm coming from. I'll do my best to try and make it make sense for you. But at the end of the day, your mind's got to be open enough to accept what's being said and kind of ride with it, At least do some thinking on it. Most of the time, people don't want to think about it because it hurts them emotionally. And it's hard to grasp onto something when you're being hurt emotionally. Which again, is on you. It's not on me. It's not on anybody else. We're all responsible for the ways that we act and react and, whatnot. So I guess I'm just imploring you to be more open-minded. It doesn't mean you have to believe things that are said immediately, but it means that you should consider them. Don't immediately just swipe them away as, oh, it doesn't go with what I want to hear, so I'm just going to ignore it. Because, at the end of the day, whatever you want to hear should be secondary to what, to making money. And that's a hard thing for a lot of people to get through. Let me see here. Let me kind of catch up with you guys here. You can get better sodas in Mexico than U.S. Yeah. When you talk about that, the pure sugar. I'll tell you what, guys, honestly, sugar itself is a heck of a lot better for you. Or I guess you should say nowhere near as bad as corn syrup is. Corn syrup's just awful for you. It really is. Yeah, corn syrup. Corn syrup. They a lot of studies out there, attributing it to weight gain and weight retention, diabetes, and not diabetes because of weight, but diabetes because of corn syrup itself. It's pretty awful stuff though. Let me see here. Let me kind of catch up with you guys here. TV Canal says 123.6 is an expanded flat. Well, there's no exact point. It's not like, oh, if it goes above 1.236, it's not an expanded flat. Again, that's more guidelines. You're looking generally around that area. But, often it gets to 1.618 or even more, especially in crypto where price moves so strongly, so quickly because of, liquidity and the way the market's made up. But, 123.6 is not like a definitive, like you go above it, it can't be a flat. It's just guideline stuff. Remember, guys, in Elliott Wave, there's guidelines and there's rules. Rules you can't break. Wave 2 cannot drop below Wave 1. Wave 3 cannot be the shortest of 1, 3, and 5. Wave 4 cannot drop below Wave 2. These are rules that can't be, ignored. Guidelines are like, generally we look for Wave 3 to reach the 1.618 of Wave 1. Generally, we look for Wave 4 to pull back to the 38.2, maybe the 58, or maybe the 50%. Those are guidelines, and those give you kind of targets and ideas to look at. But guidelines are not, definitive. They're not. They can be, price can move beyond those levels. So just some thoughts on that. Let me see here. Let me kind of catch up with you. They do make Coke with cane sugar specifically for the U.S. market. They do. Dr. Pepper, originally the Dublin, Texas plant, is where it was the only place that you could get Dr. Pepper made with pure cane sugar. Joe Cola, I think, is that still around? That was a big thing, a few decades ago. I know they were made with pure cane sugar as well. Andrew says, zoomed out, it just looks like a giant bull flag on Bitcoin. Yeah. My current idea is that we're still heading up. Getting up there toward that six figure, if not higher. But that's predicated on things continuing as they've been. If we get some breakdowns of some significant levels, well, then we're going to have to take a look at it again, for sure. Common Man, what's up, man? I appreciate that, buddy. He says, the Dow Jones chart, monthly candles, is it possible the bull market has ended? The most recent candle looks... Candle? What's a candle? Candle looks concerning. Perhaps a retest of 30K. Oh man, I think if we're going down, we're going down well below 30K. I think if this is the top, again, I've been discussing this idea of a macro top of a 233-year cycle ending of the everything, the credit bubble kind of ending. So I think if we're topping, my initial thought is that we've got this macro top coming in. We've got not even a recession, probably a depression coming in. And I don't mean that to scare anybody, and especially if you're a trader, there shouldn't be any fear in it. You're going to make money whether the market's going up or down, right? That's what trading's all about. If you're investing, you should be paying more attention. But again, the last year now, everybody's been kind of jumping into it, and all of a sudden it's like, well, they're up here at the top, and they might try to hold on longer than they should. They don't get to lock in those profits. Now all of a sudden, they were paper millionaires, and then they become nothing, right? And then the economy goes into the doldrums. Maybe we get a deflationary spiral. Companies are laying off employees, and production's down, and people are losing their houses and their apartments, and all of a sudden it becomes this really, really big mess. Potentially. But if you're a trader, again, you don't care if the market's going up or down. You just care that there's movement, because that's what you do. You trade movement, guys. And I want to make that clear because a lot of you are newer traders. You're still amateur traders, and so you're still caught in that whole idea. Hank mentions it a lot. What does he call it? You're investors, but you're trading. You try to say you're traders, but you're really investors. And you have to make that clarification in your own head so you understand. So yeah, comment, man. Give me a minute. We'll check over there. So as far as Bitcoin goes, guys, we're still looking at this. If you got the newsletter this week, which, by the way, if you haven't, I'm telling you, man, jump over to my thing and sign up for it there. I've got actually, let me get you guys a link here real quick just to make it easy. There you go. I'm going to pop this right in here into the chat here. But you can get that right under my my bio there on Twitter as well. You're soon going to be able to get it at the marketbreakdown.com. I've got that domain name. We're going to set that all up so you can just go there to sign up and access it and everything. But if you were in on that, guys, what you noticed, let me see here. I added a chart in there for Bitcoin. And basically, I just kind of broke it down. And I said, listen, here's the deal. Let me see if I can get this to show up here real quick. Oh, let's see. Kind of see here. I'll bring you right over here. So the Bitcoin market, here's what I was doing. This right here. And so basically it becomes this idea that, okay, we were here, we were on the pivot. I said, I think we're probably headed down toward this area. I said, if we get a rally off the pivot and it breaks out of this channel, well, then we're probably going up here around 74.2 minimum right there, right? That's the initial target off that. If, however, we're to break down and get toward this demand structure, this daily demand structure right around the daily S1 pivot, at that point, we would then be looking at a minimum of 77,100. Now, that isn't the end-all be-all. That's actually just like a third wave target, guys. So the idea would be that we've got a 1, 2, 3. Get a pullback on a 4, and we get a 5 then, okay? Now, along the way, this third wave can overextend. This is just the 1618 extension, 1.618 times wave 1. So it could overextend, and or wave 5 could overextend as well. So, if you're hoping for 200,000, if we just go by where we generally expect price to target, we don't get there. But if this ends up anything like 2017, and we've got this huge run up here over the next few months, then, it could overextend and head higher. But minimally, that's what we should be looking. And of course, as it's played out here, we're right here. We've almost hit this target area here, right? So, let me see here. Kind of just, look at that daily candle right there. It's possible maybe that could be the bottom, right? So, I've got this count here, and this count says, okay, it says A, B, and we're working on C here. Now, with this count I have on here locally, this count says we're possibly just finished 4 of circle 5C parentheses 2 here, okay? And so, if we're breaking down below wave 3 here, then, again, should potentially be looking at this area. I've got it down here around the S3 pivot on the 1 hour, which is just below the 50% retracement at $39,048. And it's right here along the bottom of the this descending channel support here. But it's really just this area, this $1,000 range right here. That really is what I'm kind of looking at as that reversal point potentially. So we could see another wick down and then a pull right back up. But here's the thing. If we start breaking out above wave 4 here, things start to get interesting. Now that doesn't necessarily say that it's done here, because right now if we actually go and measure this out, let me see here. Actually, what do we got? We got a 1, 2, 3, 4. See, we've got a 4 into here. We would have to have a 5. Because we've got it as a 3, 4, and then 1, 2, 3, 4. We'd have to potentially get a 5 as an ending diagonal here, okay? If we're breaking out above this wave 2 here, let me see here. Kind of pull this over here. So wave 2 is right up here around 43, 954, and 57 cents. So if we're breaking out above that, that invalidates this count right here. And so there's another count that says it's possible that this is 5 done here already. So I'm really interested to see, do we get this drop down and continue down, or do we break out and head up? If we break out and head up above that, basically, I'm going to be thinking that we might have this bottom here. But what I need to see is an impulsive breakout above this 1 hour pivot here at about 46,500 or so. That should carry price impulsively above that descending channel descending channel resistance. And if we can get that, that says bottoms in, we're headed up toward that 77,000 kind of area up there, minimum for wave 3. So that's where I'm kind of watching locally here, guys. We'll see how it plays out. I don't want to say we're definitely not getting down here yet, but, again, if we're breaking out above that wave 2 there, that wave parentheses 2 right here, then that invalidates. Remember, one of the rules is wave 4 cannot break out beyond wave 2. So if we go above wave 2, that can't be wave 4 right there. So the likelihood is, maybe a 1, 2, 3, 4, 5 here is an ending diagonal, and it's finished and done. So that's what I'm going to be watching there, okay? Let me see here. Hey there, Scotty. Good to see you checking in this morning. Bitcoin Anarchist, you're very welcome. He says, I think the final leg back down will tie into the expected stock market crash and a worldwide depression for 2 to 3 years. We stay up late to hear your advice there in Australia. Oh, well, man, I appreciate that. Yeah, gosh, I guess it's 1 or 2 in the morning over there, something like that. I know it's pretty early over there, maybe 3. I don't know. I think it's pretty early, though. Yeah, and here's the thing, guys. I don't know that the depression would only be 2 to 3 years. I think that's just the beginning of it, potentially. I think if we hit that deflationary spiral and we get into that depression, I think we end up having stagflation for quite a while. And that, that depression type environment could last 10 years even. Maybe even more, potentially. Because remember, we're talking about if what I'm talking about is correct, then we're talking about the end of a 233-year cycle. It doesn't just end like that, right? And so, there's a lot of things that are significant now that are coinciding or worse off than they were, when we had the big market crash, Black Monday there in October of 87, and also worse yet with the Great Depression as we hit the top of the market there in August of 1929. But remember, in both of those points, I keep pointing this out, in both those points, the market topped out in August of 29 and then August of 87. And it wasn't until October of 29 and 87 that we really got the big drop started and going there with either one of them. So, historically, end of the year is decent for bulls. It's pretty good for bulls. But there are those points in history that if it's going to go down, it could be quite significant. So we'll see how that continues to work there. Let me see here. Common Man was asking about the Dow Jones here on the monthly, I believe. So let me pull this up real quick. Let me get my chart here. Dow Jones, there we go. All right, let me see here. So we'll go and jump in here. So if we look at the monthly... Yeah, oh man, that monthly looks awful, doesn't it? Now, again, there's still another 10 days or so, 9 days left in the month. Most of that's weekdays, so, anything can happen here. We can potentially, see it going, rallying back up here and closing. If the monthly was to close closer to this top area up here, it gives it some hope that price is going to head up further. But, if I'm looking at the monthly here, I don't know. I mean, I guess I could see, look at the monthly here. You could see a 1, 2, and then a 1, 2, 3, 4, 5 gives you a 3, 4. And then you have a 5 still coming up. I mean, I could still see that. And that would take a lot of pressure off crypto bears because then they don't have the idea of the whole market and economy collapsing to kind of, further the narrative of Bitcoin having topped out already. But, again, it doesn't look good at the moment. We've got this, this huge bearish engulfing candle right now. Remember, this doesn't necessarily mean that it reverses. It means there's a pause. If we were to get something like this and then next month we're to have another supply side candle here, then that would kind of confirm that as a reversal there. But they doesn't even confirm it as a a macro top. Just confirms it as a reversal there. Now the other thought here is maybe we've got a 1, 2 right here, and then 1, 2, 3, 4, 5. So 1, 2, 3, 4, and then you finish 5 here. So what are we looking for? Well, we're looking for a breakdown below this swing low here, 33,271 and 93 cents. If we get down below that, that's that local, very first hint that maybe that top is in. If we're breaking down here below this one, it adds a lot of confidence to that possibility here. This is a much bigger clue, this drop down below this 29,856.30. So, Common Man, you're talking about potentially see a pullback down toward here. I don't think that it necessarily makes a lot of sense to pull back just that far. I think if we're getting down there, based on the structure here, I think that means we're headed lower. We're headed below the swing low here. And if we're dropping below, if we're dropping impulsively below that monthly pivot, yeah, we should expect to continue down lower. But I think if this is going to be just a pullback before continuation higher, I think it kind of has to do so most effectively rather than dropping below this 33,271 and 93 cents here. I think it's got to reverse prior to that. I think if you're getting below that, that really starts leaning toward getting down here. And if you're getting to this candle right here, this January candle of this year, I think it really says you're probably headed down much lower, that's a more macro top. So yeah, that's what I think's going on there. And if this market's falling off, guys, again, housing's gonna turn down. We're already seeing housing pulling back. If you pay attention to home sales and pricing and whatnot, in general, you see it. I mean, there's still a couple of hot pockets out there, really kind of hot pocket places. But overall, it's really starting. The market is not as frothy as it was. It's really kind of pulling back from that. We've got the rent moratoriums, the mortgage moratoriums that have been extended just a little bit longer. Eventually they're going to have to let those go. And once they do, people they didn't just really get a free ride. They owe the money that they didn't pay. And most of those lenders, they really want that money back right now. Some of them may offer them the opportunity to tack it on to the end of their mortgage or to pay it out in addition to their monthly mortgage, which that right there is going to be a lot of stress on people like that. So, if you're looking at it that way, I think, I think if this market is topping up here, I think it puts a lot of stress on an already stressed market. What does that mean for gold? Gold, guys, I'm still looking at gold heading lower. Let me see here. Let's kind of get over here. Let's take the big picture on gold here. Let's zoom on out. So my thing coming off here and what I've been talking about, we had a buy signal back there for gold in 2018, and that had like a target up here of around this swing high. So I mean, it was an awesome move, right, to get in from this area right here, right toward the end of 2018, into this move up. So in Discord, members that were around back then, they might remember it. We had that, right? So that's great. The idea being that maybe we've got an ABC down here, and then a WXYXZ kind of thing going on up here, right? So you get kind of like this move up. So you've got this ABC up here, and then you've got this triangle right here. So it goes W, X is a triangle, and then ABC is Y, right? So W, X is a triangle, ABC is Y, and then this is X, and then you've got ABC as Z. And then we'd be looking for a breakdown back down here toward this 1,900 to 1,000 kind of level. Maybe even a little bit lower there, taking it down toward the bottom here. Kind of like a large flat correction is what we'd be looking at here. For right now, macro-wise, you can see that we're finding support here. See this swing low right here back in June? Right there around 1671. We had a challenge of that right here in March. So that was June of 2020. This is March of 21, 1673 and 30 cents. And then here in August of 21 at $1,677.90. So we've got kind of this challenge in this area here, which, as you can see, the previous resistance right here. As you can see here, February of 2020, we have that $1,691.70 swing high here. So to me, this is that area. This is this area. And I think if we close down below this on the monthly, I think that sends us minimally down into this wick here. This is demand right here. So I think minimally it'll send us down to this, that's a low of 1450, and it's 1596. So basically $140, $150 range right there that I think it will send us to, if that happens. And then if we lose that, again, we should be looking down here toward 1200, and potentially, we've got 1100 here and some change. And you get that 1,000 area down here. So those are kind of the levels I'd watch as it's dropping off here. Is it potentially 3 down and then, are we moving up here? I guess maybe we can have a 1 with the 2 as a flat here. And then 1, 2, 3, 4, 5. So maybe a 1, 2, 3, 4, 5 up here. Potentially on something like that, and that pullback right now then is, so far that 38.2 kind of level there. So I mean, there is the possibility that could be the bottom there, but I think you've got to wait and see what goes on here, because right now price has been consistent. I mean, look at this. So we get this drop over here in February of 21. Price closes below. It finally closes back above in May. But immediately in June, right back down. All that in May was lost right there in June. July, barely. It closes just over the pivot. And immediately, it tries to drop down. It's caught back up. But it closes down right there below the pivot for August. And here we are in September, and we're trying to push down here and close again below the pivot. So that pivot there is providing a lot of resistance. So, I mean, you're going to need some kind of 2-month move here. You're going to need a month where it closes above and a second month to follow up that it closes above that to give you something that you haven't had since it dropped down below at the beginning of the year here. I think until you're getting that big picture wise, I think, if you're just looking at these larger term charts, I think your bias is still either down or at least neutral at the moment. I think, when you look at the monthly chart, you're going to have a monthly close above and then a second monthly close above that. And the more bullish those two candles can be, the more likely that this pullback is done and we're heading up higher. But, again, I don't think people properly understand the relationship between gold and everything else. I think people, they think it's a hedge and, all this kind of stuff. I'll keep reiterating, I see gold is just something that you buy and sell, just like anything else. When it hits the fan, when the crap hits the fan, right? Everybody runs for dollars. No excuse. I mean, there's no, but, again, guys, I'm telling you, it's the way it is. When the market when the economy turns down, everything goes down except for the dollar. The dollar goes up. Everybody runs to the safe haven that is the dollar. Again, I pointed out some things in this week's market breakdown about how the dollar, accounts for like 55%, as far as why it's a world reserve currency and how China's trying to get into that whole game. But 55% versus everybody else in the world, right? Even as far as cross-border payments go, it's 42% or something like that. And so you go, but the dollar, is being debased and all this stuff, and it's all so terrible, and you're losing value. Yeah, guys. Tell it to a wall. I mean, what I mean by that is, yes, that's happening. But that in itself is not reason alone why the dollar's going to drop and gold's going to go up. Okay, and I think that's again another these real disconnects that newer traders or those who are not very well read into economics and the global financial system and all this kind of stuff. I think that's something that you really miss, because in your head you see things a certain way and you want it to be that way, so you ignore the way that things potentially are. And my goal every week out here, guys, and in Discord and everything I do with the market breakdown, it's not to make you feel bad or anything else. It's just to hopefully open your mind to where it may not be open, so that you don't get caught, just in case. Just in case. Because everybody else gets caught all the time because they don't have that open mind, right? By the way, you might have noticed there's a lot of similarity here between these two points here. And if there is, this right here could be this point right here. And so you could get a rally up toward, this 1900, 1950 area, if it was to follow the same kind of play right here. It doesn't have to, but just something in case you didn't notice here. You got the drop lower. You get the drop lower, rally back up to that high, drop back down to that low right here, lower, rally back up to that high, drop back down to that low. So, just something else to watch. Don't get too overly excited if it does rally back up, because, again, it could end up something like this here. Gets it back down. Remember, the markets don't repeat, but they do rhyme quite often. Okay? They're not exact duplicates of price action, but general movements. So definitely, pay attention to that right there. Let me see here. You already know that Chris is biased towards a market collapse. I don't know that I'm biased. That's where the information seems to go. But, as I said, we still got to see A, B, and C, and these different things that we talk about. I'm not just like, market collapse, you need to sell today. I've never done that. I've said, okay, yeah, potentially, here's this. If it is, then we need to see this happen. And once we do that, then we need to see this happen. And we need to collect evidence as it's happening. But I think most of y'all get that. I think at least by now you do. Hey there, Crypto Girl. Good to see you. XRP Bandit says you can make nice moonshine with corn syrup. Well, I'll have to take your word for it. I've never made moonshine. Let me see here. Dr. Pepper is good for some barbecue secret sauce. Yes, it is. Let me see here. Kerouac, what's up, buddy? Yeah, I am doing well. Thank you so much, man. Sister and cousin, or a sister and my nephew, everybody kind of working through everything. It's been a few months now. So, it's helped her. If you guys don't know, my sister's an artist. And, it's art's her way of dealing with what happened. And she's producing some pretty amazing artwork. She sold a few pieces here recently as she kind of, works her way through all this going on. So if you guys are ever interested in buying art or anything, let me know. I'll be glad to hook you up there, give you some information there. But it's really great stuff. So, yeah. Anyway. Let me see here. Kind of catch up with you guys here. TV Canal says, but if the stock tops, then Bitcoin will go back to 10,000, maybe lower time for short. Well, I mean, if the stock market tops out, then yeah, everything will fall back. Yeah. Except for the dollar. Because that's just the way it works. I mean, historically, the proof's there time and time again. But just because the market tops doesn't mean the major move down has begun yet. Remember, that's the whole idea of 1987 and 1929, where the market topped, and then 2 months later, it really got the big breakdown. And so, if that's happening at this point, if the market's topping now in August, September, it may be October, November, December before we see a large move down. And in that case, Bitcoin still has room to open up and go. And so that's how Bitcoin could still hit some stupid levels high, before everything kind of rolls over real bad. So yeah. Let me see here. 83 Madden, good to see you. Thank you, Crypto Girl. I appreciate your comments about the newsletter. It'll continue to get better. I'll continue to work on it, guys. Just trying to get some entry level understanding in there to begin with, and then we can talk more regularly about the concepts and all that. Hank believes the real economy isn't doing too badly. Well, the U.S. had its first CPI miss. So there's a stutter right there. But, guys, we talk about inflation and really, you get a lot of headlines out there about how really just, how high inflation is and whatever. But you have to remember, these are lagged. These numbers are lagging. And so there was a huge change from the way inflation was and then, prior to the pandemic to what happened during the pandemic. And so we've got this move out. And that's why we're getting these large inflation numbers. And that's why, Powell's talking about transitory. Between that and the fact that, in moving out of that pandemic, hopefully, that whole kind of business area, that, there's still bottlenecks. There's still production that's behind. But what's interesting is if you look out to the port over there in California, there's some huge backup over there. There are just a ton of ships sitting out there waiting to get in. So again, we talk about bottlenecks, right? There's a whole bunch of product that's just sitting on the water that hasn't made its way through the port yet, and it's been sitting there for months now. So these things lead to higher prices. So yeah, I don't think it's really all that wrong. But we'll have to see now. Does it continue? Does CPI continue to drop now through the end of the year? What happens when this tapering comes in? The talk right now is potentially by the end of the year. So really, we're kind of looking at November to start tapering. But the taper, we're only talking about $5 billion of $120 billion. It doesn't mean that the government is taking $5 billion out. It just means it's buying $5 billion less is all it means. But remember, all that money that's coming on the buying side is staying with your primary dealers and banks and all that kind of stuff. It's not actually hitting the retail side, which is where it needs to be. If you want to see that inflation you guys worry about, you can talk about hyperinflation and stuff. So, as long as it sits back in there, then the only real kind of event, or only real thing we have to worry about is, are there enough treasuries? Because we've got the debt ceiling going on, which means there's a lack of treasuries comparable to the amount of money that's just kind of sitting there, in the banks and in the money markets and, the primary dealers. That's why they go that reverse repo. They go there because the Fed has a large swath of treasuries. And so overnight, right? So the Fed pays them a bit of interest on that. Why? Because commercial banks, for instance, if you're on deposit with a commercial bank, by law, they were required to pay you interest on those deposits. So the two ways they do that, guys, the one thing we keep talking about is they make loans. The other way they can do that is reverse repo, because they aren't making the loans they need to make. So reverse repo gives them a little tiny bit of return, not much, but it gives them a little bit, and they can try and go and pay out that what they owe is term, especially when you look at this short term, 1 to 5 years. When you're looking at what's on demand there as far as deposits on demand and whatnot. So, we're just kind of, the government can do what it can right now to help prop up that area of it, but it can't fix it. It can't fix it, okay? And everybody's like, oh, the Fed's going to take care of it. The Fed can't do it. The only way that we get out of this mess that they're in with all that money that's sitting on that side there, that's just sitting there, the only way they can get out of that mess is for loans to increase, for the banks to make more and more loans. And the banks aren't doing that right now. So a lot of stuff to watch on with that there. Let me see here. Oh, so I'd like to kind of catch up with you guys here. Oh my gosh, you guys talking out here. Let me see. So we're talking about, yeah, so when we look at this, again, I think when you're looking at this from a macro perspective here, a macro chart, price is finding support for gold here on this previous resistance area. So if you lose that, that should get you down to mid-range here. If you lose that, should get you down, to this 1200 area, 1300 area. If you lose that, should get you down to 1100 area. If you lose that, So basically you're looking in thousands as it comes down. I think things are looking pretty dismal for gold if you're dropping down below this kind of 1250 to 1300 area, this high volume node. That takes you down into this area here. But, again, guys, we don't need commodities to die off. We don't need gold and silver to die off in order for the dollar to rally and for there to be, an economic downturn and whatever. Like I said, I don't think people really understand the relationship or what they think they understand what this relationship is with gold, but I don't believe it to be what people tend to believe it is. I don't believe that it's this hedge and whatnot. I think it's just a thing that people buy and sell. Yeah. Let me see here. Bigger picture right now with Bitcoin as we kind of dump on back over here. Still looking for this kind of to be potentially a 3 with an A and a B and then a C down here for 4 as a flat. From that, right now, I have no reason to doubt that this isn't 1 up and 2 down here on the way. It could be something else, but right now, nothing's happened here that should have you leaning more toward it being maybe a 5 up here with an A down, a B up, and then a C down. It could be, right? We've talked about it. It could be this, 1, 2, 3, 4, 5 is an any diagonal here. Potentially per, where was it? Did I close that chart out that I had there earlier? That Trader 2000X over there in Discord was looking at. I think I lost that chart again. But anyway, with the idea that we've got this, that we completed a large triangle for wave 4 and we completed wave 5 at this swing high up here. Either that way, which if that was the case, this would, instead of being A here, would be 1 and this would be 2. This would have to be 2. But then you have to go, okay, well, how is this B here, right? Because if this is going to be B, if that's going to be B, it has to be an ABC, right? So I don't know. Do you go this instead of a 1, 2 as a flat here? Is this an AB? And then 1, 2, I don't know, maybe 3, 4, and then 1, 2, 3, 4, 5. That's a much uglier count than getting 5 up through this. That 7 is much uglier than 5 here. So, again, I don't see anything going on that says this definitely, or should really have you strongly thinking it's headed lower. Daily, there's this great potential, kind of large demand wick here as things are going on with right there. You know what? Let me do something here. Let me kind of pull in OBV real quick. Not compare symbol. Next one over. On balance volume. Not really telling it. It's just kind of in agreement here on the daily. Let me zoom in a bit. Let's try a 6 hour. Let's see here. OBV double top there when we had the decline here. It's double bottoming right now where we've got a decline here. So, I mean, OBV is suggesting that we should have some upside coming out of this, at least on this shorter time frame. See here. Yeah, your 4 hour here, a little bit more local. 4 hour is showing this drop, a little bit lower drop here. So again, keeps open the idea that we could get a fifth, one more wave down toward that target area here. You got this high volume node right around 39,745 or so. They're at the top of that range. So again, could see, you know, one more fifth wave pull down toward this area and then kind of rally up. But, you know, again, we'll have to watch that local there, what I talked about earlier, as far as that local wave 2 and 4. But yeah, I mean, you know, really, you know, if we look at this, all this is doing is pull back to retest this previous area of resistance here. That's all we've done, guys. Gotta move this out of the way. This is your range right here, as I've been drawing out for months now. That's your range. And all we did was break out, pull back, retesting that range resistance as support. We should head on up out of that. I mean, that should be your default view, especially right now with how this is looking at the moment. So we'll see if that's what happens. But, you know, again, guys, there are no guarantees in trading, and you should have a default view, you know, general ideas of what usually happens when, you know, A, B, or C happens. And you kind of go with those unless something else shows itself differently. Let me see here. When am I going to start to being more bearish under 37? Nah. I think I become more bearish. I'll break down below 28.8 here. As long as we're above this, we've got 5 waves up here. So as long as we're above this swing low, it's still possibly just a wave 2 on a pullback for a wave 3 up. So yeah. Let me see here. I gotta catch up with you guys. Hey, Crypto Girl, thank you so much. I saw what you said about me and my sister. I appreciate that. Yeah, that's pretty good stuff. Let's see here. So yeah, that's kind of what we're seeing there. Mark says Canada appears to be getting back to pre-COVID type life right now. Yeah, so, you know, when it comes to other things that may be going on, of course we have the Delta variant out there, right? And then we've got this new Mu variant, right? Not really all that new, but this Mu variant. And supposedly the Mu variant, the MU, is actually resistant to the current vaccines out there. You know, so what kind of factor does this play into everything? And I think the biggest factor it plays is like COVID itself is just a governmental response. What does government do? You know, and if government goes in there and starts forcing everybody to sit at home again, you know, businesses are going to suffer. And, you know, the economy, it's not that it's really doing all that well. It's just that it looks like it's doing extremely well because it did so poorly, you know, at the height of the pandemic there. And so a lot of these numbers are lagging. And so it looks like these huge jumps, right? So I think you've got to really kind of pay attention to that. I've got a great article that I linked in there by a professor over there at the George Washington University. It's in issue 2 of the newsletter this week. So if you guys haven't looked at that article, be sure to look at it. It gives you a good, instead of me trying to explain it all out, it was already written. I could just link it, right? But it does a good explanation of the inflation and things that we're seeing now, the numbers that we're seeing now, and what they may or may not actually mean. So, you know, again, that's kind of the same idea that I'm looking at. So, you know, I think everybody else, the market is kind of looking the other way, most of the market. But, you know, again, as I said, guys, when you're getting to extremes in your macro cycles, your macro markets, your macro tops or lows or whatever, at those points, everybody feels the same way. So Wall Street, money managers, retail, everybody. So when you get toward a macro top, everybody believes it's going to keep going up. You need to keep buying the dip. Macro lows, everybody believes it's not ready to go back up, and nobody buys the lows. Except for the few people out there who are paying attention and taking a little bit more risk and potentially, you know, shorting those tops and buying those lows. So, let me see here. Have I heard anything about the IRS getting a few billion to hire more agents to specifically go after rich people? No, actually, the funny thing about the IRS is they have been getting less and less money for years and years and years now. So they're, and that comes at a time when they have all this crypto stuff really springing up. And so, the IRS is on its heels when it comes to that. They were already short-staffed. And then crypto's coming in really big, and now it becomes really difficult for them to do it. They keep getting, like I said, they keep getting less and less money is actually what's happening with them. Which is why, like I tell you guys, this idea about tax, you go, oh, don't pay the tax, you ain't got to worry about it, they're not going to catch you, whatever. Well, yeah, they're going to go through Coinbase and other on and off ramps to find out, to try and nail you. The IRS isn't going to do it person to person, too resource intensive. But they can use Coinbase and other on and off ramps, and they start looking at what you're claiming versus other information they're getting elsewhere. And that's where most people get caught. They don't realize that somebody else somewhere is giving the IRS information as well. And so when those anomalies start ticking up, a lot of it's automated, but when it starts ticking up, it gets kicked out to a human being who then goes in and starts looking it over. So, if you're reporting something different than what you're getting from your employer, red flag. Expect to see a letter from the IRS. By the way, guys, if you're in the U.S., the IRS will never do anything over the phone. They don't call you up. They don't threaten to send you to jail, anything like that. They send letters. You have your 90-day letters and all these other things. They've got this process that they go through. So if anybody ever calls you up and leaves a message that says, this is the IRS, there's a warrant out for your arrest, blah, 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 just laugh and hang up. They don't do that. If the IRS ever goes after you criminally, they do it through the Department of Justice. And the Department of Justice, I know when I was in law school, they weren't interested in taking on anything under $10,000 owed. But that's with, that's with what you didn't pay and fees and interest and all that other stuff. So don't think that you won't, because they can take it. They can take it. So maybe something changes and DOJ starts taking it. But I know there was that big thing, it was like $10,000 limit that they needed to have or whatever. Now the IRS can take you to court, but they'll take you just to tax court or, district court. By the way, you have your choice in that. You can, if you want to take the IRS to court or you want to go to court over it, you can choose the tax court or the district of court. Most of the time, tax court seems to have a better leniency toward taxpayers. None of this is legal advice, guys. This is all stuff you can generally find online, so make sure that if you have any of these issues, that you look them up. You speak to a tax attorney about it. But these are just kind of some information to kind of guide you where you need to look and what you can look at. But I'm going to tell you what right now, this whole idea of, I can just tell them that I didn't know I was supposed to mention that I had crypto when it's, the top thing that they list on your tax return the last couple of years now. That will not fly. I don't know that you'll find a judge around that'll accept that. The IRS won't accept it. No. So don't think you can just kind of put it off and, if I get caught, I'll just play dumb. I would never try that. No, not with that. What's going on, Mike? Good to see you, man. Not an issue if you're not a taxpayer. Well, if you're not a taxpayer and you should be, then there's an issue. But, again, guys, if you are purposely not paying your taxes, that is tax fraud. If you are lying about your taxes, and lying means leaving out information that you should be reporting. That's tax fraud. That's a criminal offense. Don't do it, guys. Just talk to the IRS. You can get it worked out. The IRS you can even sign up for a payment plan online, guys. You don't even have to talk with anybody at the IRS. If you have to go back and redo your taxes and you owe some money, go log on online and just set up a payment plan. Don't talk to anybody. Okay? Don't let fear of having to face them after you've not put your information out there, lead you to do something stupid like that and not pay it. Get it paid, guys. Get it paid. Just my person-to-person, suggestion there, guys. Let me see here. What else do we got going on here with the markets, guys? Let's see. What's going on with oil? Let's take a look at oil here. Whoops, wrong one. Oh, got rejected where we expected to. Wave 2 up there at the pivot. Dropped on down below wave 1. Should have further downside. Locally here, let's see. You might go here to here and go, oh, look, there's going to be bullish divergence, but there's not really. What you have is this point to this point, which is, that's your bullish divergence right there. But then you have this point to this point, so lower lows and, of course, lower lows here. So don't get caught up thinking that's bullish divergence right here, okay? As long as price remains below that wave 2 swing high up here at the 1 hour pivot, wave 3's got a minimum target of 65.81. If oil's going down, that's going to have a negative effect on the loonie, on the Canadian dollar. We should, especially if that's happening and the DXY is rising, that strengthens the dollar, weakens the loonie, and so that USDCAD pair should be primed for long movement on that. Here is the dollar right now as I'm looking at it. So we hit that pattern target, of course. And you see we rallied straight up through this, and we came back, found support on go up. I've talked about this so many times before, guys. When you have an area of supply or demand, in my case, it's a supply structure here. If you rally right through that, you should expect price 9 times out of 10 to pull back to that EQ area, retest it as support, and then rally back off. And you get that perfect example right here. Big, large push on through it, pull back to it, and now we just want to look for some continuation up. As you can see, we're trying to get a crossover, bullish crossover here in oversold. Pop out there on the 4 hour, rally up a bit. We do have hidden bullish divergence right here on the 4 hour RSI. Let me get this set up just for 4 hours so it doesn't show up on any other charts. So you've got these lower lows here, and we've got potentially much higher lows here. So look for some continuation up that, and they should, right? Pull this up, should head up. I've got a minimum wave 3 target here of about 93.8, which will carry us above this wave, parentheses 1 swing high up here. Still need to see us getting up above 94.742, guys. Until that time, we're still vulnerable to further downside. But right now, this is kind of what we've got going on. Let me zoom out here a bit. Well, just do like this. You know, we're making higher highs and higher lows off that potentially macro bottom here. Well, that's May here in January. As boom, boom, and you got this done. Still trying to push up there. So don't see any reason to cry about it going lower. Again, even on those large time frames, if we look at this large channel here, you can see we broke out, came back, retested support, kind of heading up on this EQ here, working as resistance and support. And so this channel here, this is interesting. This channel I drew off this swing high over here in December of 16, January of 17, and to the January 2021 low. And then I pulled it up to this March 2020 high up here. And so that EQ, again, that EQ is really interesting on that. Resistance, support, resistance, support here. So, you know, once we're making kind of through this area, we should have a strong move up. Now, you got a lot of money managers out there talking about how the dollar seems to be overvalued right now, and it may be, but that does nothing to keep it from rising higher. Remember that what's going on with the dollar is going to be predicated on a lot of what people believe is going to happen and what is happening. So if interest rates rise, then the value of the dollar is going to rise. Now, here's the thing. So Powell talks about tapering, and I think a lot of the people in the market are still kind of associating that with, if he's saying tapering, then we're talking about interest rate rises or interest rate raising. Now, Powell says it's going to be a slow grind to raise those interest rates, but the market is still going to respond as if those interest rates are coming tomorrow, kind of thing. So unless the market kind of is rational about it and recognizes that, I think, we'll continue anytime there's talk about tapering happening. I think you're going to see a bullish event with the dollar. Again, a lot of what goes on in the market is not what actually happened, it's what people believe is going to happen or what may happen. Remember, it's all about that aggregate response. Let me see here. Let me see here. Let me see. Just kind of catching up with you guys here. All right, Crypto Girl, have a great day. Thanks for joining in there. So I mean, again, guys, and I'm gonna tell you what right now, your dollar is what you should be paying attention to. I think that dollar is going to tell you what's going on with everything else. Again, that doesn't necessarily mean that the minute the dollar moves, everything moves in the opposite direction. It's this zoom out to a larger time frame and look for that overall trend direction. If the dollar is trending up, then everything else in general is going to start trending down. Right now, the dollar really is just going sideways, guys, really since back here in July of 20. You had this sideways, which dropped here, which then went up to that sideways, which dropped here, which then went up to this sideways pullback. It looks like it's making higher highs and higher lows as it digs deeper into this territory right here. But this really is just sideways here. As long as it goes sideways, whatever trend is going on will continue going on otherwise. Whatever other trend is out there. But this is really just sideways. Or if you want to, it's really, you can go sideways from January of this year. It's sideways this year. It's really sideways from over here, though. This whole area. So if you're getting a breakout above this area here, no more sideways. At that point, you've got a definitive upward trend going on here, which you should see, happening opposite the other markets. Again, doesn't happen right away, but you'll see them kick in and follow in as the market participants start getting concerned and risk off and whatnot. You can say mid-80s all you want. Doesn't make it right. Yeah, like I said, until we get above 94.742, though, as we continue to say, 80 is still a possibility. We'll see what happens here. You guys have been following, Hank and I have a good time with that. If you're new, don't worry. I wasn't really giving him like a mean hard time. Just something Hank brings up often. It's become just a fun thing. Let me see here. Hey, what's going on, Block Tech? Good to see you, man. Let me see here. So I mean, again, you can keep on looking out. You can keep on zooming out. If you zoom out to let's go ahead and zoom out to the monthly because we were looking on monthly on other things. So we had this bullish, this hidden bullish divergence here. Remember, price finding support from February of 09. So this February 09, March 09 area right here, guys, this was the bottom of the market after the great financial crisis, which was the top of the DXY. And so we, again, remember what I told you, that rally straight through and then pull back and retest. Shoot. There we go. Right there. Boom. Came up. We came down again. And so from, February of 2018 here, a low, high, potentially higher low in January of this year. But we need to get a higher high above this 102.992 to give us a low, a high, a higher low, and a higher high. Until then, it's just a potential higher low. Potential. You have to break out above that to lock that in as a higher low, though. Because otherwise, you can go up here and then come on down, and then what you have is a high, a low, a lower high, and it breaks down below here, so it gives you that lower low. You see? But this is a pretty significant support right here. We'd have to lose this. This is the upper 80s here. And then that potentially gets us down, again, mid-80s gets you right around this area. Low 80s gets you right around this area. So definitely if we're losing this 88 level, yeah, I mean, sure, you definitely look at mid-80s, maybe low 80s coming off there. Yeah. But if we continue up through here, things are what they are. What I'd like to see here in terms of the monthly is this a nice impulsive breakout and close above the monthly pivot. that would go a long way towards saying, well, that bottom's probably in there and we're headed up. Locally, you've got this double bottom thing going on here. You know, again, finding support where you had this previous congestion here, this demand right here, providing support, which is based off this demand over here. So, again, we'll see if we can get that. But once it breaks, once it pops, it should rally right on up toward that upper 90s area. Should fly right through all this pretty easily. And the markets are going to feel that. The markets will feel that. I believe they will anyway. They should. So yeah, it's kind of what we're looking at there. Let me see here. So yeah, I mean, again, looking longer term, if you can get an impulsive breakout above this pivot, and more importantly, if you can get a nice big 1 monthly candle that breaks out above this pivot and closes above this swing high, which is your swing high prior to that pivot. See, it's this support resistance area right here. Right here. See how that works? Let me kind of just throw it right here. Yeah. See how it works here as support, resistance, support, resistance. So, you know, if you can get a close above this 94.742, that's that level, guys. That's what I'm talking about. That's my wave 4, potentially off this down move here. If you can close on the monthly above that, one nice big candle that takes you above the pivot and above that and closes, I think that's really become significant as far as adding confidence to the idea that the bottom's in, most likely. Yeah. But again, guys, you know, there's no guarantees in trading at all, right? We know that, right? I talk about this all the time. Don't listen to anybody else out there that's going to guarantee you price is going to do one thing or other. I don't even guarantee you. I've been doing this for a quarter of a century. I don't guarantee you a darn thing. Because I know better. I could completely misread something, guys. We're human. We're going to make those mistakes. And we're going to make them more often than we like to agree. Than we like to believe we will. As human beings, we're really good at, sadly, as human beings, we're really good at minimizing our shortfalls and maximizing our, you know, how well we do. Well, we're really, really good at that. And most of us do it subconsciously. We don't even notice that we're doing it. Man, it's a rough life to live if you're doing that. For sure, right? Yeah, risk management. I mean, absolutely. Risk management is the way it is, guys. If you still haven't taken risk management seriously, I honestly don't know what to tell you at this point. You're just asking to lose money, period. There's no two ways about that. All right? See, if we go for this count here, I mean, you get 1, 2, 3, 4, 5 up, right? So you've got 1 up, ABC down, ABC up, 1, 2, 3, 4, 5 down. So you have a flat correction. So you have a 1, 2 right here, right? And then you just work your way on up here. You know, so, you know, maybe you've got a 1, 2, 3, 4, 5. Or 1, 2, yeah, 1, 2, 3, 4, 5 maybe. So you get this leading diagonal kind of thing going on. And then A, B, 1, 2, 3, 4, 5 is C. So you get this 1, 2, and then 1, 2. So 1, 2, 3, looks like A, B, C is 4. You get a slightly higher 5 there. And so, you know, if you're looking at it that way, it's possible you got a 1, 2, 3, 4, and a 5 up here. It's also possible that you've got your 5, 1, 2, 3, 4, I'm sorry, 5 right here. Not over here, over here. And then maybe you've got, you know, an A, B, C here. In which case this makes it a 1, and then an A, B, C is a flat for 2 heading up. So, you know, possibilities is what's going on there. You can probably count that a different way, though, as well. Just some things to watch out there. Oh, these people. Got to block them. Oh, let me see here. So let's kind of zoom back in here one more time. Where are we at here? Yeah, so we're getting this drop down, kind of what we're looking for. Let me zoom into the 15-minute here. Man, see, anytime I zoom in like this is where it gets kind of crazy because we have a 1, 2, 3, 4, 5 potentially. And then 1, 2, 3, 4, 5, A, B, 1, 2, 3, 4, 5 might be a C. See, so you can get a 1, 2 here. Remember, it's the idea that if this count is correct and you got a 4 here, then this is a 1, 2 right here. And so if you're breaking out above this level, then this has to be done. So you'd have to be something like a 1, 2, 3, 4, 5 here. So maybe an ABC is 1, 2, and then ABC is 3, 4, and then an ABC is 5 right here, ending diagonal. And so that becomes then 4 and 5 here. So don't assume it has to drop down here, guys. It got pretty close to it. That's why I'm telling you, watch this area here. Watch to see if we get a breakout above this swing high. Because if we do, and we get above this 43,950, 457, then, you know, I don't know. I'll go back in and try and see if there's a different count that could say that this is still 4 and we got 5 coming down. But, you know, coming in and counting it down, man, look for an impulsive breakout above the 15-minute pivot. If you get that, man, you should look to potentially target that descending channel resistance. You break out of that, that tells you, hey, listen, that bottom should be in here and we should be headed up. So make sure that you're watching that there, all right? Let me see here. So yeah, you know, again, that's what we're looking at. I don't know if the bottom's in or not. It's not worth it to me to say it is or isn't. But when we zoom in here, there's a good argument to be made that this may actually be done. That wave 2 may be completed. That we got 5 down instead of just 3. And again, watching on that daily, the daily closes in another 6 hours or so. Watch this daily candle right here. Watch how that prints. Locally here, you know, you've got this range here. Let me kind of zoom out here a little bit, zoom in a little bit. And, you know, you have this spike here, right here. It doesn't fall from the top. It's right down here. And what I find most compelling about it is this idea. Let me kind of zoom in a little bit more so you can see. Notice how your volume expands, but your candle spreads start getting smaller here. You see your volume peaks with this right here. You still have small candle spreads here as your volume stays relatively large. The only time you really get any movement here are these two candles where your volume's down here. So again, what that tells you is when you get to this spike of volume, it tells you that there's a significant amount of supply that came into the market right then. And yet demand showed up and overcame it. You know, it closed higher than where it opened with all that volume. Now there was still follow through to the downside, but demand continues to show up, especially with this candle right here. So this is interesting here. And if we can get this close, if we zoom back out to the daily, we're kind of looking at this range right here. If we can get this daily close back up above this 42,830 and 77 cents, if we can close above that today, that makes a compelling case for a spring right here, potentially. Because remember, a spring is a drop down and rally right back up into it. And we're pretty close to it right now. We've been hovering around that all day. Now, that doesn't mean it has to go up at that point. You know, it'll probably go up. It'll probably pull back again, give us a higher low you need to see on lower volume. And then that'll confirm. That'll test this spring here, and that'll confirm it as the bottom and continuing up is what we should be looking for. Like what you had here. Now, again, sometimes you may get a secondary test. But nonetheless, that's what's going on. You have your spring. Pulls back, you have a test. Pulls back, you have a secondary test. Rallies back up. This move right here could be the similar. You could get this close up above the range low there. That would go a long way towards suggesting this might be a spring here. You just want to see if there's a test. If you should get a pullback then, and when you do, should be on much less volume. The lower the volume, the better. Should be a higher low, and then you're looking for upside with that. So yeah. Let's see here. Polyfarms, what's up? Says, any love for silver on the horizon? Let me see here. Let's find out. Here's your oil. You can go here. So silver right now, I'm kind of looking at the idea that we're doing this wave 4 thing. We've got bearish divergence forming on the 15-minute here with that higher high. So A, B is a flat, 1, 2, 3, 4, 5, potentially done right around the 38.2 retracement. So if we can get a breakdown, below all this, initially this swing low right here will be your first clue. If we get a breakdown below $22.36 here on the silver futures, that should lead to a drop down below wave B at 22.135. And in that case, that gives us a wave 5 minimum target here. Whoops. Of about 20, God dog it, was that 21.60? Yeah. And that would just be my wave 3 there. If we're looking at larger time frame though, and let me see here. Yeah, so this is the range here on silver, guys. Like I said, this range, I think I've shown this to you before. This range is back from August of 20. So about a year. Okay? Yes, Hank. It's called stepping stone reaccumulation. Anyway, so this right here is the range. Again, my biggest concern about this range is this volume that came in at the top up here. But man, that is a heck of a range, right? And so you can see that it works out as support here, resistance, resistance, support, resistance, all the way through. And so now we're in this downtrend here, really from that swing high over there in February of this year, but locally, from this, what is this, May high, yeah, May high here. Now, some things that might be of interest, this is the daily. We do have a bit of bullish divergence potentially printing here. Right here. We've got a, whoops, come on, there we go. We've got a slightly lower low here. We've got a higher low. Daily, we're almost bottomed out here and oversold, trying to cross bullishly and oversold. As far as price action goes, we're finding support. We got rejected the pivot and finding support on the S1. Now, again, when we're talking about pivots, I don't necessarily immediately buy that this is going to be a breakout above. And here's why. We moved in sideways between the pivot and the S1, rejected at the pivot. We came down the S1, made a lower low. Often that signals that we'll have a rally and then a drop back down. So a rally from about this area that takes it up, probably hits this kind of 23.75, 23.80 kind of area here, and then drops on back down. But sometimes you'll see this rally back up. And so if you're looking at this daily chart, if you can get a rally, a nice impulsive rally, which means expanding volume, larger candle spreads that take it above pivot and above the swing high here at 24.945, to me that would be a pretty good local clue in this area that we may be headed up to 33, 35, or even heading up to 40 or more going on that way. Until that happens, though, I think you need to continue to be careful trying to long silver because of this range here. Now the other side is, let's say we get kind of this rally from this area, it comes up here, and then we get this breakdown, and that breakdown happens with large candle spreads and large expanding volume. That'll tell you that this is likely could end up being a distributive area. If you do have something like that, I mean, you know, again, this 1977 kind of area would be that first place I'd look. But you don't get any real support until you get down here around $18. So you want to be careful on that. If you see that volume expanding, getting crazy there, like this, you know, and you get those larger candle spreads coming down, that's following it down, what you need to see is candle spreads that continue expanding, they continue getting larger, and your volume continues getting larger as well. Because what that tells you is you have supply, you have more and more supply continuing to be added as price drops. That means supply is following price down. It's pushing it down. Rather than what you have here, which is just supply at the top, and that's it. Let it just fall on its own. It's aggressive if you see volume expanding and candle spreads expanding because, again, you have that volume continuing to follow down. By the same token, it's bullish, it's aggressive demand if you see that volume's expanding and your candle spreads are growing as price is rallying. All that tells you guys is that if it's happening when it's going up, you've got more market buying going on, stronger market buying than market selling. If it happens on the way down, it tells you have stronger market selling going on than market buying. And remember, market selling and market buying is just when you don't wait for price to get to a level. You have to have it now. You have to have that price right now. You have to sell, you have to buy right now. And so you go and just sell or buy whatever the price is at. It's not a limit order. A limit order says, well, I'm not interested in selling unless it hits this level. Or I'm not interested in buying unless it hits this level. So when we talk about supply or demand being in control, what we're talking about is aggression. We're talking about, are your buyers or are your sellers in control? That's what we're interested in. All right. Why is OXT having these ridiculous pumps? I don't know which chart you're talking about, but I haven't been following OXT, so I don't know. I haven't heard anything in news that says anything. I don't know if that's OXT Bitcoin or OXT USDT you're talking about. You're bullish on the silver in my beard, tell your writer. Yeah, I got a little salt and pepper going on in there. Let me see here. OXT. I guess we'll look at USDT. I'll assume that's what you're talking about, Mike. Yep, OSUD. Okay. It pumped just now. Let me see here. Let's see. So if this is 1, 2, 1, 2, 3, 4, 5, looks like a leading diagonal going on there. I didn't grab. Try again. This is 1, 2. Then we usually look for wave 3 to hit up here, which is about where it's at there. So I would assume this is 1, 2, 3, 4, 5 here. Just doesn't want to grab for me here. So yeah, I mean, my first thought is this is the count at the moment. That gives us a current pullback of about 70.5% here into wave 1. So you would have an A, a B, and then a 1, 2, 3, 4, 5 here. So that's why I think you've probably got to bounce. It's hitting that 70.5. That's an institutional level, institutional pullback level, as I tell you guys about. 2, 1, 2, 3, 4, 5. Yeah, so if this is a leading diagonal here, then I'm looking for that to probably be the bottom, which gives us a target up here of about 60.6417, right around the R2 pivot on the daily. Let's see here. Yeah, you know, that makes sense. Look at it. It comes right up there where that high volume node is, where you've got a lot of trading going on in here. So it takes you right up to that, yeah. So that would make sense to me if that's the case right there. Now, as always, you know, if it's going to be a leading diagonal, it could be a 1-2, 1-2. And so if it ends up being that 1-2, 1-2, either way, you expect price to at least get to that area. Potentially up here around 78.26. So the other, you know, the alternate count being that this is a 1, 2, 3. Right there. And then that would give us a 1, 2, 3 way up here. 4 on a pullback, and then a 5 that breaks out above that swing high up there. But in either way, you probably should expect resistance right here at this supply structure on the daily. So probably in the lower half of this between 0.8692 and 0.9481, this lower half. So yeah. Hey there, Merv. Good to see you checking in, even if you're a little late. But yeah, so you know that's kind of where what I would look at it as. Probably what's going on at the moment. My default thought is maybe we've got you know, this leading diagonal going on. But if you do continue to rally above that 64.17 area, I would you know, take a look at maybe the 78.26 as this alternate counts as wave 3 of this larger 3 then. In that case. But yeah, I mean, I like it. I like the structure. It looks good. Your daily Stochh RSI is trying to break out of sold now. Yeah, I don't know. Let me see the weekly. Anything going on the weekly here? If you want to really look for some confirmation, look for a weekly impulsive breakout above the weekly pivot and close above it, and then look for one above the swing high here at 51.62. If you can get one there, it looks like it's a good move back up. This is just one giant range here, really. Let me see. We stayed with a higher low off here, looks like. 1960, 1965, yeah. So we had a higher low off that. Excuse me. So yeah, but I mean, this is just basically one large box here from when it opened, right? Since about September of last year. It's basically just one big box. So if we can get about, you know, above mid-range on that box, we should be good. Look, you know, good to go toward a higher move off that. So we're not going to look it up here, even though it kind of hits that same area. We're looking from this low here to this high, then you get a pullback, and you get this breakout. So there's resistance here. We go out, we move back, drop back. So we just got basically, you know, low, high, higher low, higher high, higher low. So you've got bullish market structure coming off the June 21st, 2021 low here. So again, getting a breakout above that swing high up there at 1.04 gives you then your low, high, higher low, higher high. Gives you overall bullish market structure off the all-time low in November of 2020. Yeah. That's good entry, man. 1987, yeah. And right now we're sitting up there 35.06. Yeah, and if it continues heading up like it's like we're looking here, that can turn into a lot more money, sure. And thank you for saying bless you after I sneezed there. Let me see here. So yeah, you know, that's what I'm kind of looking at with that. Oh, let me see here. USDCAD right here. We had a 61 or 61.8 or 65 pullback, but expected because it was such a small move here. Basically, I think what we have here is a 1, 2, 3, 4. We got a 5 coming up. We should probably end in here. potentially up here around the highs, up here around the R2 pivot on the 1 hour, 1.2889 or so, 1.3, right around that area, 1.2889, 1.29 area right there. But that just gives us then this larger 3. So, you know, again, my count coming off the bottom here, you know, if you really zoom out here, I've got a potential leading diagonal coming off here as a large 1, 2. And all we need is a breakout above this to kind of confirm that, above that kind of 129, 210 area. We're pretty close to that. So, you know, we've got a 1, 2, 1, 2, 1, 2, 3, 4, 5. So 1, 2, 3 get you up here about 1.2, 1.3 area. That should give you that parentheses 3 target. And then, of course, you have a pullback for a 4, and then you have a 5. And, of course, that gives you your 1, 2, 3 then. So, you know, it just continues to build itself up here as we continue to do it. Looking for a breakout above this swing high, though, to really kind of confirm that we've really kind of got this move, bullish move coming off the bottom. Remember, guys, this all started. This is the 1 hour. Let me zoom out to the daily here. This all started with this beautiful rounding bottom. By the way, guys, I'm not saying this is a cup and handle, but I see a lot of guys, you know, price dips way up here, like halfway up or 3/4 of the way up and back down, and continues doing that. And people go, oh, look, it's a cup and handle. It's not. It's not. If you want a cup, it should look something like this. And the closer it looks to this, the more likely it is. If you've got spikes coming from your bottom area here, going up halfway or more into that, and multiple ones doing that, it just, even just one, but multiples especially, it's not a cup and handle, guys. You should expect price to remain around the lows, blowing it up here. And you'll get a pullback, and you'll continue up like that. So it would look like something like this. All right? But that's just a real quick, because I get so many people talking about, you know, price comes down here and does this thing. And they're like, oh, look, it's a cup and handle. I'm like, no, it is not. It's not, okay, guys? So, yeah, so there we go. We have it as we continue to move this up here. You know, bullish things were above the daily pivot, and we broke up through this. We consolidated around the daily pivot and then rallied. Large candle spread, large spike of volume, you know, with a little bit, and then into this one as we hit this area here. So you've got good push there. You just want to see this, find this support here and continue to break out above. And that should have us, you know, continuing higher there. You know, big picture here, right here about 1.318, 1.32 the area, 1.313, I guess even. You've got this high volume node, so you want to pay attention there. Potentially this one right here, 1.307 as well. But, you know, just from a everything out of the way kind of perspective, you want to watch out for that kind of area. Whoops. Yeah, so you got basically this, you know, this descending resistance here. They really just saw this kind of just this really large wedge-ish thing. Not really a wedge for purposes of trading it, but the idea being that you have wider price action that narrows down as you get toward the bottom. And you have the breakout, the retest of the area, and then continuing to break out there. So, you know, there's a lot going on about that as far as breaking out. You can see that wave 1 here hit my wave 4 over here. Pull back. And so that, you know, breaking above that. I like that. We broke above the wave 4, the lesser degree, way down here. But again, in terms of higher volume nodes, notice we're sitting on top of this high volume node now. So now we've got this one. If you continue to bring in more data here, you know, you can have more data to work with. But this should be an interesting area to try and get through here as well. 130 to 134 kind of, 130 to 134 area. But man, if you break out above that, I mean, it's pretty clear run-ins after that. So I would continue to watch that. So yeah, there you go. Let me see. Going back here. So we'll see again. Watch how the daily closes. See if we can close back up above this $42,830 and 77-cent swing low on Coinbase. If you could, that adds a lot of possibility to the idea that this is a reaccumulation. This is a spring in it. Price does reaccumulate as it rises, guys. It happens often. It's just this stepping stone reaccumulation. So you have your major reaccumulation. You have a smaller local reaccumulation. Goes up, pulls back, have another one. So then it becomes stepping stone reaccumulation as it moves up. And that's what you usually should expect. Same idea right here. You know, you've got your reaccumulation here, reaccumulation, reaccumulation. Well, distribution into reaccumulation here, reaccumulation. And even locally, here, 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 as it continues to build up. Price does not go up linearly. So you should expect those areas along the way. Same thing with the drops. You know, you have those areas along the drop where you can redistribute. So, yeah. Okay. Hey there, Rasta. Good to see you checking in. And it is 1 o'clock, guys, so I need to get out of here. As always, I appreciate you guys showing up. Don't forget to sign up for my newsletter, guys. I put the link in there earlier. You can go over to my Twitter at TXY Capital, and right there under my bio is a link to sign up for it. Soon you'll be able to sign up and take care of your stuff, whatever, by going through themarketbreakdown.com. As I said, lots of cool stuff coming up, guys. You know, we're going to soon be moving everybody over to TexasWestCapital.com. Finally, we've got a new back end that we're implementing. Which one of the best things about it is the way in which I give you guys the education will be so much better. And on top of that, you guys have been asking for an affiliate system for a long time. A lot of you guys, you know, are happy to go and talk about us because you believe in what we do, and I'd like to go ahead and get you guys paid for that. So we'll have an affiliate system that you guys can sign up for. And that way, if anybody signs up through it, you'll get paid for that. And so much more stuff coming on, but definitely don't forget, guys, Alpha Trader, all right? Nobody knows what that means yet. You guys will find out within the next few weeks. I'll let you guys know, okay? I hope you guys have an amazing week. Trade safe. Remember, the only thing that you control in the market is how much you lose. So keep on working on that risk management, all right? Other than that, guys, just be patient. Don't FOMO in, don't FOMO out. Have your, again, proper risk management. Have those stop losses set before you enter a trade. Know where you're getting out and where you're getting, stopped out and why, and make sure it makes sense. Do everything you can to make yourselves winners, guys. Don't put forth the effort. Don't not put forth the effort. Okay? All right, guys. Y'all take care.